already. She goes in the markets. By the time it's 11 a.m., she's already with her kids. She already hits her objectives and gone. That's beautiful. And that's why we teach all these strategies, man. Quantum strategy, that's mentor strategy, is beautiful, beautiful. And then you have different type of scalpers too that you can grab as are one of the best educators in binary, Taurus and Graham, with a profitability efficiency of 90% or more right now. He's averaging 90% more. So when you're into binary, you quick trades, 1 to 3 minutes, boom, 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 in and out at the market. But just because you're in and out the market doesn't mean that you're gonna be a short amount of time inside the graphs. You're gonna analyze the graphs. You're gonna wait for the market to come to you. You do not chase. Remember that. You never want to chase. You want to bring the market to you. You want to wait for the market to come to you. Okay. Afterwards, we have day traders. Now, day trading is a beautiful, beautiful way of trading. I myself, I'm a day trader too as well. I day trade US 30, NAS, SPX, gold. Okay. Now, day trading is such a beautiful way of trading because you do need to invest more time into it. You do need to invest more time into day trading. And afterwards, you have to know when the market's gonna be again coming to you. Now, day traders will analyze the markets before they get in the graphs. Sometimes they analyze even from Sunday, and they're just waiting and go. And this is the thing: when you're a trader, you have to be very disciplined. You have to make sure you understand what times you're gonna be entering the market. Just because you find a trade at 4 p.m. doesn't mean that you have to enter the market at 4 p.m. If you're very disciplined, you're gonna have your time. That's it. At the end of the day, you don't want to be on the charts all day long. They just create another job. We want to create a skill set that gives you your time and freedom back. Does it take time? Yes. Is it quick? No. But it depends. Because what's the first thing that I told you guys? We have to go with each individual's psychology. Doesn't matter if you're brand new, doesn't matter if you're a well-rounded trader, doesn't matter if you're already 7 years into this, the market always changes. Why does it always change? And why is it good to know all these types of trading styles? I started off as a swing trader. My psychology was beautiful. I have a psychological resource to actually hold a trade for days or even weeks. And I'm okay with that. I can handle that psychology. But the market has been so volatile that I now became a day trader and scalper. My strategy that used to take 2 to 5 days or even sometimes a week and a half to hit my objectives, now it's taking hours or even a day. So day trading, you want to make sure to understand what a day trader is. Okay. When the market opens, you're going to close before the market closes. If you have any type of trade that actually surpasses or passes that limit right there, guess what? It just turned into a swing trade. If you are going to be a day trader or you are entering a trade that is just a day trade, make sure no matter what, follow your rules. And it always closes before the market closes. Okay. And you don't want to go into a market. So swing traders, we understand that there's going to be commissions, there's going to be swap, there's going to be volatility when the market closes and opens. If you didn't know, forex market, indices, doesn't matter what it is. The market closes every single day and opens every single day. Now, we as retail traders cannot access the markets on the weekends, but the market is still open. See, institutions are still able to access. Why? Because they still have to move their money. That's why you see on Monday gaps. You see on Monday very big gaps, right? And understanding that there's gaps, there's a volatility because the broker's going to manipulate the spread when the market closes and opens. Day traders want to avoid that. They want to avoid the commission. They want to avoid that big spread that sometimes takes you out. They want to avoid that. Why? Because they're moving a lot of money, and the more money they move, you don't want to pay more swap unless you have positive swap. And we're gonna hit positive swap all the way to position trading. Okay. So now, what type of psychological resource do you need to have in order to become a day trader? You want to have the psychological resource that starts off with this: a trading plan. Okay. Now, This trading plan is our own economic outputs trading plan. Okay, this is a trading plan that I'm always studying, and I do have my own trading plan. But why not study from the best, right? We have day trading plans that we need to follow every single rule. So if you're a day trader, you're gonna follow the rules of opening when the market opens. If you're gonna be opening on New York, or if you're just gonna be playing, or you're just gonna be trading the New York session, which is indices, stocks, etc., whatever you want to trade. You any skill set that you learn here, you can trade it in any market. Okay, you can go into stocks and use it. You can go into crypto and use it. You can go into indices and use it. I just wouldn't recommend using like the way we trade major pairs or big indices or futures into altcoins. That's the only thing that I would recommend staying away from it, unless you're following Noah DeFreitas strategy, because man, his strategy is insane percentages. I'm telling you, like percentages that will blow your brain, that will blow your mind. Like you're just like, what? How did this happen? How? You're like, no way. You just keep looking at the phone. You're like, no way, no way. Am I sleeping? Am I dreaming? What's going on right here, right? And this is why it's so beautiful to understand what type of trader you are. You have to go really deep into yourself. Make sure you go into psychologically side of it and understand what market you're in and what psychological resource level you're at. A lot of people cannot handle holding a trade all the way to the next day. A lot of people can't handle holding trade for hours. They want quick, fast. And if you are that type of person, you're a scalper. If you want quick and fast, you understand that there's going to be a lot of losses very quickly. And there's going to be a lot of wins very quickly too. Because if you are 50% or more efficiency, let's say you're 60% efficiency, you're going to have in 100 trades, you're going to have 40 losses. You don't know how those 40 losses are going to come. And if you don't know how those 40 losses are going to come, you're going to understand psychologically that if you lose 5 trades, then you're okay. Because at the end, you're going to be a winner. You understand that, well, if I'm going to have 40 losses and I don't know how those 40 losses are going to come, they could be in 10 trades if you're a scalper, back to back to back. How much am I risking? And if I'm doing a funded account, well, am I going to be able to handle that percentage loss? If I'm doing my own personal account, would I be able to handle that resource of that drop? If you're risking 1% per trade and you're doing scalping 3 minutes, boom, 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 and you lose 10 in a row, that's 10%. If you're trading let's say a $200,000 account, that's 20K you just lost. Are you able to handle that psychological effect on you? Because this is one key thing, and I'm not gonna go into depth with it because we have one of the best traders in the entire world, Mr. Jay Adams himself, coming up next with risk management. This is why I tell you guys, risk only 0.2 to 0.5% because it gives you more opportunities. You don't have when you lose, you control it. See, everybody wants to just have wins, but this this is a business, and in business you're gonna have losses. And as a scalper and a day trader, you understand there's gonna be more losses in your strategy than a, let's say, swing trader. Why? Because it gives you more room to breathe as a swing trader, and in day trader scalpers, it gives you less room. Scalpers usually are using stop losses of 5, 10. One of my best friends, he's a scalper. He uses stop loss of 2 and 3 pips in Forex. He only trades Forex. He's only 2 to 3 pips stop losses. He understands that he's going to lose a lot, but when he wins good. One of his trades covers a bunch of his losses. He doesn't go for 1-to-1s. He actually goes for 1-to-6s, 1-to-8s, 1-to-10s, 1-to-20s. I've seen him hit 1-to-30s. But he understands that there's going to be a lot of losses, a lot of losses, a lot of losses. So what type of psychological level are you at? Are you at a psychological level that you're going to be able to handle those losses? Well, scalpers you. Are you in that quick, that adrenaline too? Because it is adrenaline. This is the thing with this. As a scalper, you want to have the psychological resource to not let greed come to you, fear come to you, You just follow the plan to the T. The best traders in the world, they have an efficiency of like 30%, 40%. Noah DeFreitas was talking about this yesterday. The best traders in the world. Yet they are the best traders in the world because they worked on their psychological effect. One of the things to work on your psychological effect, right here, trading in the zone. Okay. Trading in the zone is the book for psychology. Now, let's say you don't want to be on the charts 3-4 hours. You don't have time. You're still working. You're in the stage of learning the skill set, and you don't have the time to invest in, because this is an investment. You don't have the time to invest 3-4 hours to be on the charts every single day. So what are you gonna do? Well, here, let's go to the next trading style, which is swing trading. I love swing trading. I myself started as a swing trader, and I will always consider myself, that's my main stronghold, my main strong suit as a swing trader. This is why you will see my trades at 50, 60 pips, but I do 15 pip trades. When I scalp, I'm at 5 pip stop losses in Forex. I've done 15-point stop losses in US 30 beautifully. And you guys can find that in my Instagram. When it comes down to the type of trading, you want to be a well-rounded trader, because sometimes you just have free time. And what's the best thing to do? Invest. You don't have to trade. You don't have to trade. You can just analyze the market, learn from the market, see what's going on, see when Jerome Powell's speaking, see how the market's affecting it. So swing traders, what are swing traders? Swing traders hold a trade more than a day. Okay, the swing trader can hold more as a trade from day to weeks. That's what a swing trader can handle. Psychologically, a swing trader can handle all the ups and all the downs and all the ups. Trust me, I hold my trades. When I hold my trades, I'll be in profits, and I'm talking about good profits. And all of a sudden, I'm in drawdown, and then again back in profits, and then again in like deep drawdown. Like I'm talking about. I remember one trade that it was killing me. Like psychologically, that was the worst psychological trade I had. Okay, I literally came almost hitting my stop losses like 3 times. I was like, oh man, just hit it already. Just take me out of this misery. See, and I was barely new. When you understand risk management, which is coming with Jay, now you're just like, oh, well, let's see, let's run it. Let's see, it's going up in profits, and then it's coming down in profits, and it's going up, and it's coming down, and you just let it go, and you live your life. See, I love swing trading because you can actually put trades, go to sleep, and wake up profit sometimes. You just put a trade and just let it run, and then you just hear your trading view alert, because I that's how I check my trades when it hits my alerts in trading view. I'm like, oh, and then I go check my MT4, MT5, and it's just beautiful. Okay. Okay. Cool. Awesome. So another thing. So when you are swing trading, this is when I was blessed with my son. And let's say you don't have a son. Let's say you don't have a kids, but maybe you have your own self that you want to invest into. You want to always go into the best version of yourself, right? Maybe you don't have the time to invest 4 hours, 5 hours a day on these charts. So what are you going to do? You can invest a little bit of time. You can put a trade and then just go and just let it run. I love swing trading, and I've always loved swing trading because the whole thing that what attracted me to trading was time and freedom. I the and at the beginning I didn't have money, but once you have money, trading gives you so much time that you can invest into your own self. The whole key thing with trading for me is to make professional independent traders is this: you're not gonna need a job, you're not gonna need a product, you're not gonna need a customer. It's just you, the markets, and yourself. And the markets are always evolving, so you always have to evolve with the markets. You always have to do personal development. And swing trading gives you that time and freedom back. See, you become a great scalper. You go into an hour, boom, and you get the same results as a swing trader. You become a day trader. You can go in 15 minutes. I've seen Mancha hit her percentages in 5 minutes and out of the market. And as a swing trader, let's say you have businesses that you're running. Let's say you have et cetera, et cetera, et cetera. Or you just want time for yourself and just put in one trade a week. I know traders that put 1, 2 trades on a month and they're wealthy. Wealthy. My mentor, my personal mentor that taught me this, he was putting 1 or 2 trades a week and he was making 6 figures a week. And he was younger than me, 2 years younger than me, the guy that taught me this. He was a professional trader. He used to run hedge funds and everything. That's the beauty of this. What type of trading style are you? Now, let's go into the next type of trading style, which is position trading. Position traders, that's when you're moving a lot of money. Most position traders have big accounts because they like the interest. Now, in position trading, remember guys that I was telling you that day traders, don't want to pay swap, don't want to pay commissions, don't want to pay interest. Swap is a type of interest. So when you're a swing trader, every time you hold a trade for a day, you're paying swap, you're paying fees. There's commissions, there's fees that you're paying. It's called interest. It's called negative swap. Okay. Now, I'll say position trader, if you put, and this is why position traders love this. Okay. Once you find a broker that gives you positive swap, you can find a trade and hold it for months. Now imagine if you're having, let's say you have a trade that you just added, that you're moving $500,000 in that trade, 500,000 in one trade. You have the psychological and the financial resources to do that. But you're holding this trade, you're putting up a big stop loss and you're hitting the TP at such a long range that you're using weekly charts. Let's just use that. We're using weekly charts. Okay. When you're doing that, imagine having positive swap. Instead of paying fees or interest rate to the broker actually pays you because you're holding such a big trade for such a long time. So you're not just making money off the trade itself, but you're making money off the interest that you're accumulating throughout that entire time. And every day, that interest, you get paid, you get paid, you get paid, you get paid. This is called positive swap. Now, position traders are the big boys. Position traders have a lot of money, okay? Not necessarily big boys as institutions, but position traders have millions of dollars or hundreds of thousands of dollars. Some position traders have hundreds of thousands of dollars. You can put a trade and just run it. Does it mean that you, let's say I have $1,000 account, does it mean that I can't position it? Yes, you can. Oh, yes, you can. I have students that position trade with a very small account, very small account, and they put a 0.1 lot size and hold it for a month. And literally they hold it and they know what they're doing and they just leave it and the profits are insane. Okay, so let's recap real quick. We have scalpers, which is quick, fast in the markets, but you might have to invest more time every single day to be in the markets and analyze in the markets. You have day traders that you might have to invest more time as well in the markets every single day. And then you have swing traders that remember, scalpers and day traders, they avoid what? Swap, and they avoid commissions, right? There's still commissions when you take a trade, but there's extra commissions, there's extra fees. Now you have swing traders that can just literally analyze the market on Sunday, put in the trade, just leave it. Don't even come back into markets in 2 days and live life. They don't have to invest that much time in the markets unless you're a professional trader that you're always evolving with the markets. Okay. And then you got position traders that can last a trade for weeks up to months. And they're acquiring not just the trade itself, but the percentage of the swap fees because it's positive swap. Okay. With this, guys, I can't wait for you guys to, man, The next, this man that I'm gonna introduce, this guy is one of the greatest traders there is. This guy has changed. I'm talking about hundreds of thousands of lives, if not millions. I'm pretty sure he already changed millions of lives. He's been in the business for 8+ years. He's created some of the biggest impactful services and products that has come and just changed the entire, I'm talking the entire trading platforms, the entire trading, just the entire trading field. Everything that I love about trading, this guy represents it. And one thing that I can say, I myself am a man of God, and this guy's a man of God too. And when he leads, and when he speaks, listen, because he would change your life with just one conversation. So up next is our man, our very own, the creator of Maverick, one of the best strategies there is, our very own Mr. Jay Adams himself, Market Mastery. Let's go!
What's up? What's up? What's up? Hey, can you see me? Hold on, I gotta fix this real quick. I don't know what just happens with my camera, but I'm here, guys. Hey, guys, put some fire in the chat box if you have learned anything from Mr. John Liao here. I want to see some flames in the chat box. That is flames, flames, flames. While I get this figured out here, but we're gonna have some fun for the next 30 or so minutes as I'm on here. I'm not sure why this isn't working. I had everything literally set up for this specific call, and right before I turn my camera on, my camera goes out. So I'm gonna figure this out. But nonetheless, guys, I want to talk about a topic that nobody really wants to talk about. And that is the concept of risk management, right? So, you know, when I first got started in the industry of trading, I was interested because, to be honest, I saw it as kind of like this home run. If you've ever treated trading or saw trading as like some type of home run, just post some sevens in the chat box. That's 777 in the chat box right now. Okay. Still not sure why this isn't coming on my screen here. Post some sevens. If you felt like you saw somebody trading and you saw somebody have X amount of profits, and you're like, man, that person just made someone's, of course, disclaimer, someone's yearly salary or someone's what I make in a week, they just made in one trade and stuff, man, I gotta do that. And then all of a sudden, it becomes kind of this term of what's called gambling. And that's something that you should never, ever, ever, ever want to do in this specific niche of trading, right? And that's why I want to talk about this term of risk management 101. What is risk management? You know, I'll just relate it back. I've been in this industry for 8 years, like John was saying, and thanks for that. I've done a lot of things, taught all across the world very successfully, but that's not why we're here today. We're here today to give you guys an insight on what trading can really do for your life and beyond. Maybe your future kids' lives, etc., because it's a skill sets that nobody can ever take away from you. Does that make sense? So understanding that, when I first got involved, I was like, man, you know, if this is real, then I mean, life could be anything I want it to be. And that's slowly what it started to become. But in the beginning, guys, I didn't understand this concept of risk management. Risk management, okay, Gary, we can go to the next slide. By definition, is a strategy that allows a trader to minimize loss while increasing probabilities to gain. Okay, it's the ability to control emotion because a risk threshold has been set. It's essential in any trader's journey. Okay, I want you to understand this, right? Because it's essential in the journey. Why is it essential in the journey? It's because a lot of people who get introduced to trading, they are throwing risk management out the window. Okay. They're just throwing it out the window. They're saying, hey, you know, I have such and such going on, and you know, I saw this person do this, and you know, I'm interested. I'm interested, and I'm going to treat this like gambling. And they throw everything out the window. But when it comes to things in real life, they tend to understand that risk threshold with things in real life. What do I mean by that? I mean, well, if it comes down to the property I'm investing in, of course, I'm going to understand what is my potential gain by X amount of time, right, for this specific property. Or maybe it's something else. Maybe you own a business that sells iPhones, right? Oh, am I going to, you know, am I going to buy iPhones at premium prices, or am I going to buy iPhones, you know, when they're discounted? And these are the things when it comes to trading that out there in the industry is really flawed. What I mean by really flawed is I mean by people throw risk management out the window. We can go to the next slide, Gary. I want to do a little thing real quick, and I want you to look at these two different traders. Okay, I want you to look at these two different traders. I want you to look at trader A, then I want you to look at trader B. Trader A risks 10% per trade. Okay. Trader A also has an average risk to reward of 1 to 0.5. And their win rate is 55%. You now have trader B, who risks 1.5% per trade. Average risk to reward is 1 to 4. They also have the same win rate of 55%. Which trader, I want to see in the chat box, which trader is the more successful trader? They have the same win rate, One's risking 10% per trade. One's risking 1.5% per trade. Big difference. Which trader is more successful? I want to see some answers in the chat box. Doing some tests here while I still try to figure out. Guys, I'm sorry. I had everything set up in my studio. My camera was here and on. It was perfect. And then once I turned my video on, it was all messed up for some reason. So I unplugged it, plugged it back in, and now it won't show on the list of sharing my camera on the settings for some. Oh, there it is. I think I got it now. Let's see. Boom. Oh, there we go. Wow. It shows up. What's up? I'm real. Let's check out the chat box. So trader B, right? We have trader B is more successful. Why? Why is trader B more successful if one's risking 10% per trade, and then you have one risking 1.5 per trade? It comes down to one thing that people do not understand. Winning ratio is irrelevant to trading success. Yes, I said it. Being in the industry a long time, many people won't show you that. You look at other platforms, you go to look at other companies, other traders, whatever it is, you're like, I win all the time. My win rate is 80%, 90%, 95% wins. That's all cool and all, but how's the risk to reward? Because I've seen traders who literally make no money and they have a 90% winning ratio. Why? Because their winning ratio is a statistic based on the fact that they had what's called a 50 pip stop loss, which is a factor, a numerical number equivalent to the distance in trading, which is things that you will learn here in this 5-day masterclass. They'll have a 50 pip stop loss, but a 10 pip profit target. And the market will go a little bit of 10 pips, but they're risking 5 times that amount. Even though it hits that small little amount, oh, I won. And it's a big, big fallacy in this industry. What I'm saying is, guys, you need to follow traders who understand the fact, and John says it best, Corey says it best, a trader is a professional risk manager. You're not a trader to trade. to make, I mean, we're here to trade to make money, right? But you are a professional risk manager. You have to put yourself in the mindset of thinking, wow, now through technology, I'm blessed and able to trade from the comforts of my home. I'm blessed and able to be on a phone, and I can go to the beach right now or wherever I want to go, and I can look at my phone, and I can have all these charts and stuff, and I can learn how to, and I can execute trades now from my phone. Well, before you didn't have to be able to do that. Before you had to have an office somewhere. Maybe it was Wall Street in Chicago, maybe in New York. You had to exchange in Chicago and all these different areas. You had to be in a hub to go into an office, sit in a cubicle, have a phone, call up people, say, hey, invest in this, invest in this, invest in this. But what were those people doing? They weren't selling things. You understand the institutional game, right? Where most of the liquidity is in the trading arena. Big boys. You have to understand, what are they looking at? I want you to think of this term. Trading is a business, like anything else in life. It's a business. How is it a business? Well, you're trading based off prices. The whole entire goal for a business is to do what? I want to see some answers in the chat box. I'm going to get you guys light up, and this isn't going to be no boring, masterclass show. It's going to be something that is involved, in your face. What is the whole goal of a business? I want to see some answers in the chat box, right? Let's see what you guys think a business is supposed to be. Yes, technology is amazing, Janelle. Jennifer, good to see some good faces on here, familiar faces. No, nobody wants to answer what's the whole entire goal of a business? Goal of business, there we go. I guess it's slow to come through. To make profits, make money, to make money. Okay. So if trading is a business and their goal is to make money, the people on the flip side, our goal is to essentially make money. So when you relay it to risk management, then why is there a need for people to throw all of this risk management out the window? When it comes to trading, they tend to see this as some type of home run. There goes the camera again. I don't know why it's doing this. It's never done this in my life. Here, I'll just stop it real quick. You guys will see me. But why do people tend to just throw it out the window? Because it's trading, man. Because it's trading. Because I saw X person go and make this, and I saw this person go this on Instagram, and I need to do that too. So now I treat it like the home run. Somebody got funded this amount of money, and now they're doing this. Yes, that's all possible. It shows you the possibility of what's in the market, but it does not mean you should throw risk management out the window. Okay, let's go to the next slide, please, Gary. It's exactly a gambling mentality. This is what's essential in trading, and what I'm getting at is risk to reward. How much am I willing to risk, and what is the potential gain? Having a good risk to reward is more important than the winning ratio itself. A trader can win 45% of their trades. Yes, I said it, 45% of their trades, yet still be profitable if their risk to reward is amazing, astronomical. And how is that so? How is it so that somebody can win less than half of their trades and still be profitable? I'm going to see if I can share my screen here. Okay, I'm going to share my screen. See how it looks. Here we go, right here. Okay, we're going to get into this. Just post some twos in the chat box if you guys can see the stream. We should be up and running. Okay. How can somebody win 45% of their trades right, and still be profitable? Comes down to risk to reward. What do I mean by this? A lot of traders, this is what they do. They'll look at very instant portions of the market, and they'll say, oh, wow, look, the market's going down. And they look at things like this, and they're like, oh, wow, look, we have a breakout here. So, and then they sell right here, and they're selling right here. And this is, guys, I'm speaking from experience. This may not be you now. For my driven people on the call, you obviously know this is not you now because you guys have learned the ways of the market. But look, they'll see this and be like, oh, the market's dipping. It's kind of like that. I like to relate it to like a crypto mentality when Bitcoin's already surpassed like its all-time highs and people are still getting in. Dude, you got to get Bitcoin, because everybody's talking about it and it's like, oh, it's a new thing. Yeah. And then now it's back down to like 30K and stuff. And people are saying like, oh, I shouldn't have bought Bitcoin. Yeah. No, you should buy Bitcoin, but you just didn't understand that you shouldn't buy at a premium price when the price is premium. You should wait for that discounted price to then get back involved into it. The same relates to trading. You look at the right-hand side of the screen here, 1.04087, 1.02. These are prices. You need to start thinking in this way because these are prices that not just you are looking at, that institutions are looking at. Institutions are looking at this and they're saying, wow, look, you know, this is selling on here and selling here. And look at this person's risk here. They understand. Do you understand? They know what is taught out there, especially now that trading has become such a vast skill set that is attractable to so many people across the world. You really think that your one little strategy they don't know about? You really don't think that they understand that 90% of people in this industry fail at trading because they're doing the basic outdated philosophies, outdated strategies of, you know, all these different things? They know that stuff. So they specifically want to sell the market down to get you in here to then what? They see it as this. They see the market as what's called a bullish market, and they see this as a discounted price to then engage and get involved. Why? Because when this gets hit, your stop loss, which is, again, a factor of risk management, which we're going to touch on after this, but you understand that they want to run those stop losses so they can collect your money. And what happens? This goes out and you wipe out the window, okay? That's one example of bad risk management. Let's just say you're on the right side. A lot of people, they'll say, oh, well, it is discounted, and they'll do something like this. They'll say, oh, well, looks like the market's going up a little bit, and I'm going to risk this, and you know, we're going to risk 74. This is 74 pips, and I'm going to take my first target. And they start seeing a little bit of movement. They're up 25 pips, and they're, oh, I'm getting out. Oh, let me start closing the profits because just because you see blue on your brokerage or on your computer screen or whatever it is, okay? And look at that risk reward. That's a 1 to 0.34. How sustainable is that over time, though? Because check this out. I can win this 4 times. I can trade this style 4 times, and all it will take is one trade at that same risk to wipe out my entire profit from the last 4 trades. You see how that works now? I can do 4 times this, and I can wipe out 1 time. So now, from the retrospective things, you have what? I have, let's say I won 4 times. So I have 4 wins, 1 loss. Okay? What is that? What is that winning ratio? 80%. Dude, I'm an 80% winning ratio trader. Check me out. No, not if you're having risk reward like this, because you may be an 80% ratio trader, but my account is equal to what? 0% profit gain. Trading is a business. We are in the business of what? Making money. Aha. Lot of people's emotions might be getting hit on this, and that's good. That's why we're hosting things like this to wake you up to what we teach here at Driven and exactly what you will need to be successful in this industry long term. How to be a sustainable, consistent trader. I'll say it, long term. Getting out of the mentality like they were going over yesterday, out of the mentality of having this gambling mentality, or, you know, I'm just gonna get a funded account and make $1 million and I'm gonna live my life. Like, no, that's not why you should learn to trade. Trading is a vehicle. Okay? It's a vehicle. Long term. I always say it like this. It's a legacy play. Why? Because you best believe it. When I have kids one day, when they're 5, 6, 7 years old, when I want to go play on the iPad, guess what I'm going to say? I'm going to say, you can play on that iPad, son, but you're going to spend 2 hours looking at these charts and understanding what dad learned over the last couple decades or decade plus in this industry, so you can know when you turn 18 and become an adult, you will never have to work a regular standard job like I had to go job to job to job to job, being 25, hopeless, moving back home with mom and dad after making 6 figures a year, having absolutely nothing because I had no financial literacy. Back home living home with mom and dad. I don't want you to end up like that, son. So guess what? I went out and I understood the skill set. I understood that this is a game of risk management. If this is a business, why am I not treating it like a business? Why am I not looking at how price is discounted at certain rates? Why am I, and I did this in the beginning. Oh, check this out. Look at this engulfing candle to the upside, man. It's what traders do. Tell me I'm wrong, because I know I'm not wrong. Oh, we'll put our risk below here, and this thing's going to go rocket to the moon because we see this bar. Guess what? Swap out of the trade. See you later. That's a loss. Oh, we'll just try it again, and let's say you hit it the next time. Okay, cool. I hit it the next time. Let's check this out. Here's my risk, and I close out at this high. But look at that. How much are you really up between these two transactions? See, what I teach here at Driven Guys is, and we'll get into this later in this week, is the factor of increasing your probabilities in trading. And I'm not going to go over it on this call because this is the risk management portion of our masterclass, which is super important. You need to understand risk management. So you might ask the question is, what am I supposed to be risking? What am I supposed to be looking at? Standard risk management, guys, is about, I'll just increase this text here. It's about a 0.5 to a 2%. 2% on the riskier end. Now, I always say it like this. If you have smaller account balances, okay, smaller account balances, you're not really going to see the gains that you want to see at that risk threshold. So I would say it like this. Smaller account balances, but again, am I willing to risk? Dollar amount. Why is that important? Is it because it subconsciously tells you I am comfortable risking X amount of dollars per this trade? You have a $1,000 account balance. I'm comfortable losing 20 bucks. Okay, how does $20 relate in the reference to the charts? So let's use this as an example. We have these things that we measure in the market. A lot of you know this, pips, points, whatever the measurement of the market is. In the Forex side, it's called a pip, a price interest point. And let's say along the market, I see this break of this structure here, and I want to get back involved in the zone, which I get involved in the zone right around this area, and my risk is going to be below this low here, like such. And I teach this. I'll be teaching this. I believe it's on Thursday in regards to how I would see this. And we actually had this in a Maverick class here at Driven, understanding this. Let's just say I got into the market here. My risk here essentially is what's called 85 pips. But look what the gain I'm going for. I'm going to look for this high to be ran because that was a high that was created in the market. And that's where true liquidity really lies, in the market. After 7-8 years, I don't care what you say. I've back tested a lot of things. I tried different strategies. I tried the Zippy Wood Day, MACD cross mixed with the, crisscross applesauce, oversold, overbought, whatever it is, buy sell indicators on the charts and stuff like that. No, you don't need none of that nonsense. Do they help? After you have understood what's happening in the market based on supply and demand, based on accumulation distribution. But aside the fact, 85 pips. Here's how it works. Okay? Pips, this is how it's paid out. You have what's called a lot size. A lot size does not mean a dollar amount. It's pretty funny because people are like, oh, I'm trading a penny at a 0.01. My lot size is a 0.01. It's a penny. No, it's not a penny. A 0.01 in reference to a pip pays out what? It pays out 10 cents per pip. So what would the risk be then on this specific trade right here at 85 pips? Well, 10 cents times 85 is what? 10 cents times 85 is, at 85 pips, $8.50. Make sense? All right. What's the next range of my lot sizes? You can go from, and it just goes up. If it's a 0.02, it's 20 cents, 0.03, 30 cents, 0.05, 50 cents, so on and so forth. When the decimal place moves, right? Now I have a 0.10 lot size. See how it moves? The number moves. We're now getting into those dollars per pip is what it pays out. So the same 85 pips is now equal to what? An $85 risk. Okay? We move the decimal place one more time. It's what's called a standard lot. You see it's 1.00. That pays out $10 per pip. So now that same risk, 85 pips, is now what? $850. And people don't understand this because they treat it like a home run and they just see a trade and they want to get in. They just throw a lot size out there. They have a $1,000 account and they put a 0.5 on it because they're like, oh, I want a 0.5. Well, 0.5 is $5 per pip. So what's 5 times 85? $425. That means they are at a 40% risk tolerance. Do you think, I want you to think of your intuition here before I bring up the next speaker, who's absolutely amazing. Do you think that you would invest on a property, take out a loan, take out a mortgage and stuff, if you were at risk of that property decreasing 40% in value over the next year or 2 years, next couple weeks? Yes or no? These are questions that you got to start asking yourself, because when it comes to trading, it's all about risk management, factoring this risk. And here's how it can be to your benefit and why risk to reward is super important. Because look, if I swung, John was talking about swing trading. If I swung this trade, what did it do? It eventually liquidated the high like we knew it was going to. But that is a 1 to 5.63 risk to reward trade setup. Meaning if I risked what? I risked a 0.01. All right, if I lost a trade, I would lose $8.50. But if I win almost 6 times that amount. Same thing with 85. Oh, if I win this trade, 85 times 6 is what? If I win this, 850 times 6 is what? And this is what blew my mind with trading, is that if I can get so good at identifying places to engage in the market and increase my probabilities, have a little bit of patience in executing rather than just rushing in because a price is moving away, where I can understand how order flow works, if I can get so good, maybe today on my small little idiot account because I was broke when I found trading, maybe today I'm at a 0.01. What about a couple months when I'm at a 0.10? And then maybe it's a couple months after that, I'm at 1.00. You guys see the difference? If I can get so good at identifying the same exact move over and over and over and over again, it can be the difference of $8.50, or that same exact move I identify could be $850. And guess what? This 1.00 can go infinite. Infinite. I've seen traders do 1,500 lots at a time. You know how much that is per pip? 1,500 times 10. That's 15,000 per pip. And what? 15,000 times 6 is almost 100,000. Obviously, you're at a risk threshold of, that, losing 15,000 because it's based on ratios. But you guys kind of see what I'm getting at. Risk to reward is essential in understanding risk management. So guys, I'll get this camera, my camera's plugged back in. I don't know why it was showing up nice and clear. And then this kind of rainbow effect goes in this camera. So I'll get it situated and stuff for tomorrow. But I appreciate so much of you guys. If you guys learned anything on this call, put some flames in the chat box. What I want to do is I want to bring up one of my good friends. This is an individual that I've seen grow over the last 2 years so much in his trading journey, right? This is an individual you're about to learn from that's really dove into, he had some institutional, trading, education before, but getting into this leverage trading space, Forex, and then he found crypto through that. He essentially grew so much in the last, 2-3 years, getting a Series 65, now a Series 3. He's one of the only licensed crypto individuals with both of those licenses in the entire United States. And he's exclusively here with us teaching all of the strategies, all the know-hows in the crypto space and beyond. And I'm super proud of you, Mr. Noe DeFreitas. If I see your face on the screen, I wish you could see mine. I don't know what to do with my camera, but I'm gonna figure it out.
Awesome. Thank you so much, Jay. Let me know real quick. I know there's a little bit of a delay, but give me a 1 if you can hear me and see me all right. And huge thank you to Jay. That was, in my opinion, that's the most important lesson when it comes to trading. It's risk management. So I hope